Hi everyone, this is Ruka Yi. Today is December 26, 2011. So yesterday there were news coming out between China and Japan basically saying that, the exchange rate between yuan and yen, they will bypass US dollar. So back then when you buy yen using Chinese yuan, you have to first buy US dollar, then you have to convert it to yen. Well, but right now, since the US dollar depreciation is really harming the trading relationship between China and Japan, and if you look into those financial statements of those companies that they have foreign business, right? I mean, currency fluctuation really has a huge impact on those companies' earning. So right now, by bypassing the dollar depreciation, the trading relation between China and Japan will be enhanced. And in the long run, that definitely has a huge impact of the international status of US dollar. And in the past, the world basically focused its attention on the debt situation in both Europe and in the United States. But now, we have news coming out from China basically saying that, China's begging Japan to buy a sovereign debt. Well, that's quite interesting because we always assume that China is financially sound and is basically the savior of the world economic problem. But now it doesn't seem like it. And now that even China is in the trouble, so what does that suggest us about the world governments, right? What does that tell us about the future trend? Well, the first thing we should notice is that even the largest creditors are not in trouble. Then who's going to finance? Who's going to bail out those banks? Who's going to bail out those countries, right? I mean, you just can't expect China to bail out everyone, right? Now even China itself is in trouble. So I predict that the future trend is that just the global government is going to be like, what the heck, right? They're just going to print their way out from the trouble, right? They're just going to diminish their debt with inflation. And in fact, they have actually been doing it all the time, right? I mean, look at the balance sheet of European Central Bank. It has exploded in the past few months, right? I mean, the central bank is just basically printing money to finance those unfunded liability of those European countries that basically what their politicians have overpromised those people, right? And of course, you have the American Central Bank, the Federal Reserve, basically they're doing all kinds of crazy monetary policy, right? Operation Twist, quantitative easings, I mean their balance sheet is also expanding and possibly China, Japan, and maybe other central banks will join the race, then we face a situation of global currency depreciation, right? As new money to printed to fund the unfunded liability, the value of the currency will be debased, right? So, I mean, the only safe investment right now is something that has value and the government cannot print. That's namely commodities, especially gold and silver. So, I mean, but also the price of gold and silver also depends on how fast people realize this global currency depreciation is happening. Right? The sooner they realize it, they're gonna buy into gold, they're gonna buy into silver, right? So the price of those commodities will eventually go up if they realize this. But likely, they will realize as soon as the real inflation hits, because right now, there's a lag between quantity of money being increased and the actual price level start rising. And I'll be blogging again pretty soon because this situation is really indeed quite important. So guys, take care and see you next time.